Hello and welcome. We're so glad you're here for this essential briefing on UK tax, which has been put together by the absolute experts at My Tax Accountant. Now, the title is Unlocking Hidden UK Tax Credits, but today we're actually going to get into something much bigger. And honestly, it's probably more important for most of us. We're talking about the massive tax changes that came out of the recent November 2025 budget. We're going to explore what these shifts mean for you, your family, and your business.
So let's just kick things off with a big question, one that might have you thinking. Are you 100% certain you paid the exact right amount of tax last year? It seems like a simple question, right? But with the rules constantly shifting under our feet, the answer is getting more and more complicated. And that's because, you guessed it, the goalposts have moved again. The November 2025 budget brought in a whole wave of updates, tweaks, and some pretty significant changes. Now, some of these are fantastic. They create new opportunities to save money. But others, well, they're potential traps for anyone who's not prepared. And our job today is to walk you through all those hidden details.
So here's our game plan. First up, we'll get personal and take a snapshot of your own tax situation. Then we'll look at the new support coming for households, some good news there. After that, we are diving deep into a huge shift for businesses. Then we'll cover some really important updates for drivers and homeowners. And to finish it all off, we'll wrap it all up with a simple, practical action plan for 2026. Sound good?
Right, let's get straight into it. Your personal finances. This is where the changes are really going to hit home for millions of us, affecting the money that actually lands in your pocket. The two big things you need to understand are frozen thresholds and new rates.
Now, before we hit the numbers, there's a term you're going to hear a lot about: fiscal drag. I know, it sounds a bit technical, but the idea is actually pretty simple. Think of it as a stealth tax. It's what happens when your pay goes up, maybe to keep up with inflation, but the tax brackets don't move. So you end up getting pushed into a higher tax band, paying more tax without the government ever having to officially announce they're raising rates. It's clever, and it's really powerful. And this table right here shows you exactly why fiscal drag is such a big deal right now. Look at this. The personal allowance, that's the amount you can earn before paying any income tax at all, is frozen at £12,570. And the point where you start paying the higher rate of tax, frozen at £50,270. And they're not just frozen for a year. Nope. They are locked in place all the way until April 2031. Just think about that for a second. Any pay rise you get for the next several years could be taxed more heavily.
So here's a pro tip that really brings this to life. Imagine you're earning £49,000 and you get a well-deserved £2,000 pay rise. Brilliant. But wait, that little bump pushes you over that £50,270 threshold. All of a sudden, a chunk of that new money is being taxed at 40%, not 20%. And suddenly that lovely pay rise feels a lot smaller. That, right there, is fiscal drag in action.
And hey, it's not just about your salary. If you have investments, or you're a landlord, or you have savings, there are changes coming for you too. Starting from April 2026, the tax you pay on dividend income is going up by 2 percentage points. And a similar rise is coming for income from property and savings the year after, in April 2027.
Okay, all you savers out there, listen up. From April 2027, the amount you can put into a cash ISA each year is coming down from £20,000 to £12,000. Now, and this is really important, your overall annual ISA allowance stays at £20,000, so you can still save that full amount tax-free across all your ISAs. This change just limits how much of that total can be parked in cash.
Okay, so we've looked at the personal tax side of things. Let's move on to some brighter news in our next section: new support for households. Because it's not all about tax increases, the budget did include some real measures to help ease the squeeze on family finances.
So what's actually in the support package? Well, there's quite a bit. The biggest headline is probably the removal of the two-child limit on universal credit. On top of that, there's more support for energy bills, a very welcome 1-year freeze on regulated rail fares, a bump in the national living wage, and prescription charges are being frozen too.
Now, I just want to pause on that universal credit change for a moment because the impact is absolutely huge. Scrapping the two-child limit is expected to lift 450,000 children out of poverty. That is a truly massive policy shift with huge implications for families up and down the country.
And here's a number we can all appreciate. Thanks to some new rules for energy companies, the average household in Great Britain should see their energy bills drop by about £150 a year, starting from April 2026. It's a real, tangible saving that's definitely going to help.
All right, let's switch gears and talk business. Because if you're a freelancer, a landlord, or you're self-employed, there is a seismic shift on the horizon. It's called making tax digital. And if it isn't on your radar yet, it really, really needs to be. So I'm talking directly to you now. If your total income from your business or from renting out property adds up to more than £50,000 a year, then from April 2026, the way you've always done your taxes is about to change completely. The only question is, are you ready?
So here's how it's going to work. Step 1, forget shoeboxes full of receipts. All your records, every invoice, every expense must be digital. Step 2, instead of one frantic tax return at the end of the year, you'll now have to send 4 quarterly updates to HMRC using special software. And step 3, you still have to submit a final declaration by the end of January to tie it all together.
And this is what your new calendar is going to look like. So for, say, a freelance web developer in London, instead of that one big deadline looming in January, you now have deadlines in August, November, February, and May. It's a completely different rhythm, and it means you have to stay on top of your finances all year round.
I know, that was a pretty deep dive, but it's so important to get your head around. Now stay with me, because this next point is absolutely crucial if you own your own business, or a home, or both.
Okay, let's move on to our next section. Changes for drivers and homeowners. The budget really highlighted a fork in the road for motoring taxes and also brought in a pretty significant new charge for high-value properties.
Let's look at what feels like a tale of two cars. For those of us with petrol and diesel cars, there's some good news. The temporary 5p fuel duty cut has been extended again, and believe it or not, the main rate has now been frozen for 16 years. But for electric vehicle drivers, things are changing. From April 2028, a brand new mileage charge is coming in, 3 pence per mile. On the plus side for EV buyers, the expensive car supplement threshold is going up to £50,000.
Now, what about for homeowners? Well, from April 2028, a new high-value council tax surcharge is being introduced. If your property is valued between £2 and £2.5 million, you'll face an extra charge of £2,500 every year. And if your property is valued over £5 million, that surcharge jumps to a hefty £7,500 a year.
Phew! We have covered a lot of ground, haven't we? From personal tax to business rules to your home and your car. So the really important question is, what should you actually do with all this information? Let's boil it all down into a simple action plan.
Here are your top 3 actions to take right now. First, review your finances. Sit down and really look at how those frozen tax thresholds are going to affect your take-home pay, especially if you're expecting a raise. Second, if you're one of those people earning over $50K from self-employment or property, you need to get MTD ready, and I mean now. Start researching software today. And third, check your entitlements. Don't just assume you'll get the new household support. Double-check that you're eligible and that you've applied for everything you're entitled to.
Look, we know this is a lot to take in. The rules are complex, they're always changing, and trying to stay on top of it all can feel, well, a bit overwhelming. But the great news is, you really don't have to figure all this out on your own.
This is exactly why getting professional advice is so important. The team at My Tax Accountant live and breathe this stuff. They are experts at navigating this complex world, and they can give you tailored advice to make sure you're not just following the rules, but that you're also making the most of every tax break you're entitled to. You can see their details on the screen now, so get in touch. Oh, and while you're at it, make sure you subscribe to their YouTube channel for more brilliant updates like this. And just before we go, a very important disclaimer. Everything we've talked about today is for general guidance. Your own financial situation is unique, so it is absolutely essential that you don't rely solely on this to make decisions. Before you do anything, you must speak with a qualified tax expert, like the amazing team at My Tax Accountant. We really hope this briefing has helped make things a bit clearer for you. Thanks for joining us.